Hello everybody. So this video is entitled Nebius Q2, Nebius stock, second quarter of course reporting this morning. The stock is up 20%. It's funny, I modified the slide from last quarter. Last quarter the stock was up 17% on that same earnings report, the one from Q1. And this one is particularly interesting, and the title I came up with is They Want Us Shaken Out, because I cannot begin to understand the manipulation, the piling on of the bears that have happened the past few weeks about this stock. Of course, this is an early stock of the channel, and I cover it less now because it's a little less interesting after it ran 20%, although when it was trading at the 150, 2 weeks ago, in my view, it was very much interesting. Also, when it was trading it in the 170s, was it 4 weeks ago, and then 1 week ago, also very much interesting. This stock I've always found interesting. I've always liked it. I've liked it since the IPO, but it has a tendency to run hot, and then it also has a tendency to overcorrect and oversell. And if I look at the volatility, it makes no sense. Like I said, 170, 148, and then now 226. Actually, 226 that was an hour ago. Now it's 232. Who knows? Maybe at the end of the day 250, maybe at the end of the day 205. This stock has been very much exhausting when it comes to the volatility, and that's the feeling that I get. They want us shaken out, and this is especially true when you consider that the sell-off to 148 was to quote-unquote liquidate Aschenbrenner, which is kind of like the AI whiz investor that took over social media. And what's very funny is that, and we don't know which firm contracted with Nebius, but one of these quant firms, one of these trading firms signed a contract with Nebius, the very stock that they may, I don't know, but allegedly they could have been shorting the very stock they were signing a deal with. It makes very little sense, and that's the feeling that I get, is some people want us out of that stock, especially with Michael Burry and the bearish call, and all of these people against AI, saying AI is unreal, is not real. Well, AI is actually real. AI is fighting on all cylinders. So I have a problem with Nebius. My problem is, what is the revenue growth? What is the next 12 months revenue growth? I cannot figure it out. I know it's going to be huge, but I don't know if it's going to be 800%, 500%, or 300%. I have very little way to know, but the stock is firing on all cylinders. If you look at the past 12 months, the change is actually 529%, but if you look going forward, they say they expect $9 billion in customer prepayments in 2026. They also said that 70% of their contracts include some form of a prepayment of some sort. So this is very similar to Micron, who's making companies pay up for capacity early, pay up to get early access. And so how do we recognize that prepayment? Is that going to be revenue or not? So for the sake of simplicity, I'm going to assume that the $9 billion, I'm going to treat it like revenue. And so what does that tell me? Okay, year-end 2026, $9 billion's coming in, and of course that's the guidance right now. We have right now 1.35 billion trailing 12 months worth of revenue, and we're going to 9 billion at least within the next 16 months or something like that. And therefore, I'm getting 565 growth based on that statement. So the number that I'm using in my spreadsheet is 565% next 12 months revenue growth. Give or take 150%, give or take 200% perhaps, right? It could very well be close to 1,000%, or it could be 400%. But either way, it's mind-boggling growth, and this is why I want to say something. A lot of people feel like they've missed Nebius, and I surely don't like the stock at 233, especially when we were buying it at what price? In the 30s. Now it's nearly a 10x, not quite, but almost. We're sitting on 10x not too long ago. So psychologically, it doesn't feel good. But here's the thing. When a stock has 5x'd their sales in 1 year, it's probably okay, just okay, for the stock to be up 5x. The price to sales hasn't changed. If a stock has 5x'd their sales and the price of the stock remains the same, then you have multiple compression. Nebius has not really experienced that large of a multiple expansion, a little bit, but not that large. And that's why on my spreadsheet, when I calculate EV over GP over RG, I get a 0.14. So like I said, a little bit of an increase, right? We were sitting at a 0.11, but not that much compared to a lot of AI stocks that are run on hype, or a lot of stocks like pre-revenue companies. There's so many hype stocks right now on X that don't really have revenue, that trade on hopes. And on my spreadsheet, I couldn't even hope to put it in there because they don't have a revenue to show for, right? There's no revenue. So this is not the case here. This is a stock that, of course, is a multi-bagger, but the revenue has also been a multi-bagger. And I also want to point out EBITDA margin 50%. That's the number they reported, isn't it? So the EBITDA margin is also going up through the roof. So if you had EBITDA margin and my growth number, which, it is what it is, I'm still getting a rule of 40 of 600, which is mind-boggling. And that's, of course, because of that insane growth. And that growth is unabated. And it's tough to fathom the crazy growth. It's tough to understand how a company can keep growing like this. And it gets even crazier. Now, I'm going out on a limb, and this is a very bullish slide right here, but this is nonetheless what they say. So they're talking about some of their short-term urgent, quote-unquote, urgent deals. ASAP, sign ASAP, a short-term few months deal. They're saying they're charging an annual contract value per megawatt of 40 million. So I'm going to go on a limb here and do something a little crazy. So they're guiding for 5,000 megawatt worth of capacity, which they have access to, contracted power, right? But not developed, right? Most of it is undeveloped. This is very much like iron. Iron also has gigawatts of capacity, but also undeveloped. So I'm gonna assume something crazy. I'm gonna take the 5,000 megawatt here, and I'm gonna assume that they develop it, and by the time that they have developed it, I'm going to assume that the short-term pricing stays the same. And I'm also going to assume that, their long-term contracts with Microsoft and with Facebook perhaps have expired by then. And the reason why I'm doing this exercise, this thought exercise, is to talk potentially about the size of this company, the size of this neocloud when it is very mature. What is going to be the size of this company in the 2030s when the vision is done and when the company is very mature? Well, let's do a very simple calculation. 40 million of annual contract value, right? Times 5,000 megawatts, that's 200 billion. So you're looking at a company that could have potentially sometime in the 2030s, perhaps in 2032, perhaps in 2035, after the current, low-priced deals that they've signed last year with Facebook, after these deals are out, you could have a company who perhaps, 6 years from now, perhaps could have a $200 billion revenue run rate, an actual annual recurring revenue run rate of 200 billion. So that would be absolutely insane, right? Because assuming this company were to trade still at about 5 times sales or 6 times sales, you would be talking about $1 trillion company. And so I had someone in the comment section asking me if I think Nebius could get to $1,000, saying some people are throwing numbers out there like this stock could be worth, 1,000, 1,200, etc. I don't think it's out of the question. The question is, what about the shaking out, right? How do you do? Because there will be more bear attacks, right? That's why I'm definitely not chasing at 232. I think we'll have more bears piling on against Nebius, especially as this sector is getting more and more tribal. I'm thinking about iron folks versus Nebius folks who don't like each other and throw bare feces at each other. Anyways, in my view, this is a crazy vision, and they could achieve that vision, by the way, because of course you may say, oh well, right now the contracted capacity is 5 gigawatt. Well, contracted capacity is highly theoretical. I asked AI about this. Right now, deployed and online, they only have about 200 megawatt, and they're talking towards the end of the year, perhaps being close to 800 megawatt deployed and online. So, and they're also talking over the medium term, potentially deploying 1 gigawatt worth of that capacity they secured, deploying 1 gigawatt throughout the year of 27. So this stock has a lot of power in stock. Now it needs to develop that power in GPUs, and it needs to contract out these GPUs. And this is a stock that could be much bigger. I'm happy to have it as a long-term hold, very long-term hold. Anyways, let's finish with some of the excerpts from the shareholder letter. They don't have an investor presentation; they have a shareholder letter. But like I said, insane repricing of the contract value, annual contract value. This is this slide right here, up to 40 million, more than 40 million. So repricing, new deals, bigger deals with new logos, all of that. 70% of the deals include some sort of prepayment. So this is very close to a Micron. Like if you want to reserve memory, you have to prepay. And the deals, the payback period, they were expecting a 2 to 3 year payback period at the last report. They're now saying 1 year and 10 months potentially of a payback period. I remember 2022 and 2023 when people were saying that GPUs were going to be worthless after 3 to 4 years, right? How quick do GPUs become worthless today? Is it 6 years? Is it 7 years? Depreciation schedule, I believe, is 5 years. What's going to be the depreciation? What's the proper depreciation on a GPU? Is it 7 years now? Is the long time value of a GPU actually 7 years and not 2 years or 3 years like Wall Street anticipated? And these deals are paying back insanely quick, insanely fast. Other interesting things. So like I said, I'm just throwing Jane Street in there because I know Jane Street had a contract with CoreWeave. I don't think Jane Street was involved in Nebius dropping. I don't really know. I don't really follow this stuff. But the point is, you have a large quantitative trading firm who's contracting with Nebius, so it's good enough for Nebius. Hopefully they didn't short their supplier, hopefully, but maybe they did. I don't really know. And then this is perhaps a bigger deal to me. Jan LeCun, a controversial figure in the world of AI. He's had a lot of bearish takes on AI. But anyways, he was at Meta, right? And now he built his own lab. He decided to go with Nebius. So if it's good enough for him, it's definitely good enough for Meta, and we know there's a contract, and it's definitely good enough, I think, for a lot of people. And that's because they have services and software. That's because they have a cloud platform. That's because they have their GTM strategy. That's because they have the layer beyond the hardware. It's not just hardware. Nebius sells more than the hardware. And so let me just go ahead and talk about that slide. They are adopting a little bit of an architecture where the partner takes on more of the financing, where you can see the partners can own the land and the power, and the partner can potentially own the hardware as well. Hardware, land, and power, and when they can just own the intangibles, right? The asset-light part of the structure. So here, borrowing a part of the semiconductor playbook, where you want to own fewer assets, also borrowing a little bit of the franchise playbook, because if you're going to grow that fast, you're going to need to use the power and the capital and the land of others. And so that's perhaps what they're doing here. I like to see them going in that direction, although it seems like because 70% of their deals require some form of a prepayment, it seems like they are being very capital efficient, much more capital efficient than perhaps the competition, who has been criticized for taking on too much debt or diluting, right? Diluting is another point of concern. And I'll conclude talking about Aviride. So on this channel, of course, I talk a lot about ClickHouse and what ClickHouse could be worth and could mean for Nebius. ClickHouse is doing fine, but Aviride is impressive. Actually, the value of Aviride, either as a standalone company or as an acquisition target, I don't know who could acquire it. Maybe a rideshare company could acquire it, but I think Aviride could have a little more value than we think. And so, what if you get a news someday? Oh, some company buys Aviride for $2 billion or something like that. I think that's a very nice thing. And of course, they fully own Aviride. They entirely own it. And then this is up to your belief. Do you believe there's going to be a competitor to Tesla self-driving or not? I believe there will be a competitor to Tesla self-driving. Who's going to be first at doing that? I have no idea. But that clearly has value in the VC market, and that's something that's not taking into account, that's not subtracted out from the enterprise value of the company. When you do a sum of the parts, you should probably subtract out a lot of these VC investments that they have, and it's not. The market is entirely ignoring it. Just like for the longest time, the market was ignoring Google's ownership of almost 8% of SpaceX. The market ignores often these VC stakes. But anyways, This was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.